Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Precious metals are in the red right now, as they were in the green for the last couple weeks, having an extremely high bullish run, but now we're starting to see those resistance levels get hit and prices are correcting. Now, this isn't a bad thing. Prices are not crashing. They're not going to bottom out to zero. Do not sell right now in fear that the markets are crashing. This is called a correction or a pullback. It's actually healthy. This means that prices are naturally going to be rising higher. This is just people wanting to cash in, capitalizing on some profits really quick. It does not mean the markets are all crashing. I'm going to show a couple articles talking about this correction on some profit-taking normal consolidation. So before we start, make sure to smash that like button. Let's see if this video can get 200 likes. Everyone go like the video right now. Make sure you're subscribed and turn on post notifications so you instantly get notified every single time I post a video. So anyways, these two articles are fresh off the press, posted today, May 21st. So it's new stuff. Let's jump into it. Silver could be headed for an explosive move as demand for the metal picks both as commodity and for investment purposes, says TD Securities. TDS has recently argued that silver was increasingly trading as an industrial metal, while deteriorating industrial demand has provided a strong headwind against silver prices, leading silver's performance to lag gold's. Our firming real-time commodity demand indicator suggests it may now become a tailwind. TD Securities said, indeed, a simple analysis extracting the rolling regression coefficient of silver's returns as a function of gold in our commodities demand indicator suggested that silver has increasingly been driven by commodity demand. Meanwhile, silver inflows have been occurred into exchange traded funds along with gold. Interest from commodity trading advisors has been low, but this means potential for buying. Just potential for buying, getting in cheap. That being said, such as commodity demand to firm, the context of rising investment flows in precious metals combined with rising commodity demand creates the setup for explosive performance, particularly considering the constrained supply side and low speculative interest. So wow, silver could become an explosive metal. How high though? How high do you think prices are going to go? A lot of people speculate in the next 3 to 6 month range we're going to see mid $20 silver. The next 3 to 5 year range we're going to see $100+ silver. We're talking about crazy times, so expect crazy prices. You know, I just made a video earlier today talking about the 30s with the Great Depression and how the indicators were all screaming towards higher prices. The gold to silver ratio at all-time highs correcting, which shot stock markets down, which is the same thing's kind of happening. I've also made videos talking about the 2008 credit crisis, which led to $50 silver in 2011, 3 years later, and how that is looking almost identical to what's happening right now. So yeah, a lot of indicators are showing that silver is the bullish metal. So gold and silver prices pull back on some profit-taking normal consolidation. Gold and silver prices are lower in midday U.S. dealings Thursday on routine downside corrections following recent gains. Some profit-taking from the shorter-term futures traders was also featured today. A rebound in the U.S. dollar index was also a negative daily element for the metals. Once again, it appears the two metals are tracking the U.S. stock indexes, which are lower at midday. June gold futures were last down $27 an ounce at $1,725. July COMEX silver prices were last down 55 cents at $17.47 an ounce. Attitudes overall are still generally upbeat late this week as governments continue to reopen businesses that have been shuttered for weeks. Some sporting events have been scheduled to resume in the coming weeks, and there are rising hopes autumn sports can be played. Also, supporting more positive trader and investor sentiment is the surprising rally in crude oil prices that see NYMEX crude oil trading above $34 a barrel Thursday morning. The strong rally in the oil market has caught most oil market watchers by surprise, given significantly reduced demand and still burdensome global supplies. Just a few weeks ago, NYMEX May crude oil futures traded as low as negative $40 a barrel just before the contract expired. And now we're in positive $34. So things are going good. Things are definitely going good. Let's jump into some economics. So global economic data for May is starting to improve from the dire numbers seen in April. The IHS market Composite Purchasing Managers, the PMI for May in the Eurozone rose to 30.5 in May from 13.6 in April. A reading below 50.0 suggests contraction. The UK's PMI for the same period came in at 28.9 from 13.8. Japan's PMI for the same period was 27.4 versus 25.8. Australia's composite was 36.4 versus 21.7 in April. China has begun its more important political event this year, the National People's Congress, after a delay because of this virus pandemic. The meetings signal what the government is calling its victory over the outbreak that began late last year, and will outline key economic and social goals for the year. U.S./China relations have soared the past several weeks amid the pandemic that the U.S. is blaming on China. President Trump tweeted late Wednesday that China's disinformation and propaganda attack on the United States and Europe is a disgrace. The U.S. Senate on Wednesday moved to ban Chinese companies from trading on U.S. stock exchanges. Wow. The other important outside markets see the yield on the benchmark U.S. Treasury 10-year note is currently around 0.67%. So, a lot of stuff happening. A lot of stuff of the blame game between Trump and China going on. Everything's going to be affecting precious metals to some degree. Just some are more influential than others, but there's many different things, and they're all leaning towards higher gold and silver prices, more specifically silver. The gold to silver ratio is at 100 to 1 right now. It's dropped 25 points since its mid-March explosive record-setting highs, and now it looks like we are going to see silver start to outperform the yellow metal. So technically, June gold futures saw no chart damage occur today. The bulls still have the solid overall near-term technical advantage. Gold bulls' next upside near-term price objective is to produce a close above solid technical resistance at the April high of $1,788. Bears' next near-term downside price objective is pushing prices below solid support at $1,666. First resistance is seen at $1,735, and then today's high of $1,751. First support is seen today's low of $1,715, and then $1,700. Looks like there's a lot of resistance around that $1,750 level, especially with silver's at $17.50 level. Let's see what silver has to offer. So, July silver futures saw a corrective and profit-taking pullback after hitting a nearly 3-month high Wednesday. The silver bulls still have the firm overall near-term technical advantage. Silver bulls' next upside price objective is closing prices above solid technical resistance at the February high of $19.07 an ounce. The next downside price breakout objective for bears is closing prices below the solid support at $16.50. First resistance is seen at $18, and then at this week's high of $18.16. Next support is seen at today's low of $17.26, and then $17. July New York copper closed down 295 points at 243 cents today. Prices closed near the session low today, and profit taking after hitting a 2-month high early on today. The copper bulls have the overall near-term technical advantage. Prices are in 2-month-old uptrends on the daily bar chart. Copper bulls' next upside price objective is pushing and closing prices above solid technical resistance at 255 cents. The next downside price objective for bears is closing prices below solid technical support at 230 cents. First resistance is seen at today's high of 246 cents, and then 250 cents. First support seen at 240 cents, and then 237 cents. So, that's the daily roundup on the precious metals markets and what's happening. A lot's happening. It looks like this week's going to be interesting. I'm curious to see where the gold to silver ratio pans out, especially over the next couple months. Where do you think it's going to go? Do you think silver's time to outperform gold is here? Do you think we're going to start seeing silver outperform the yellow metal? And more importantly, why? I would love to hear your insight, what you have to say about this. There's so much going on that who knows which direction things can go, but it's all pointing towards, if you want to take an educational guess, we don't have a crystal ball to say where prices are headed, but given the circumstances, given the information, given the charts, it's all looking like higher gold and silver prices in the short term, especially for the medium and long term, but it's looking like the short term is looking bullish as well. I'm curious what you think about that. If you thought this video was educational, informational, or at least just entertaining, make sure to smash that like button. Subscribe if you're new. I post daily videos. The link to these two articles, or the article today from Kitco will be in the description. Go check out the video I posted earlier today. You definitely don't want to miss that. It's a banger, diving a little deeper into the 30s, the mid 20s and the 30s. What happened to the gold to silver ratio back then? What happened to the stock markets, the Great Depression? How all that correlates to today's times and what that means for precious metals in today's terms as well. It's definitely a good video. You don't want to miss it. And with that, I'm out. Peace.